Good morning, everybody. Happy Friday. Black Friday, 9 o'clock Eastern time. Day after Thanksgiving, limited trading hours today. Markets open till 1 a.m. for equities, 2 p.m. for bonds. Or I'm sorry, 1 p.m. for equities, 2 p.m. for bonds. There is some trading today, so we will see what that looks like. I read there was a CME power outage and futures market was disrupted this morning, so I did notice that not much is happening. Yeah, we got some futures action now. It was around 0.10 this morning, but stalled, and it was like that all night. So I didn't really see any futures market trading until just now. All right. 6,800, looking at some live gamma. Let me bring up my dynamic trend. Okay. So I would expect a pretty quiet market today. Um, Maybe some surprises, but for the most part, pretty quiet. Here was our push up on Thursday. Uh, Gap up, stall in the morning, push up through the day, softened up a little bit towards the close, but still positive on the day. Today, as long as we maintain some price action above 67.85, then we should be looking pretty good for positive gamma to stay intact. So, any pullbacks here are fine. We just want to see that this is the support zone. 67.85, 67.80. You don't really want to see price crossing over that, just in case it starts to stir up some negative gamma. So 6,800. Okay, we'll get a read on this morning. Couple ways to play the day. I would suspect, let me log back in here. I would suspect that prices will be pretty quiet, not a lot of volume. Plus or minus on the day might be also quite small. Let's look at today's expiration, 26th, 28th. I'm just going to log out, log back in. This wasn't refreshed. This is not, is this real feed of VIX? 1749. Some tiny little candles. All right, 1749. So 1.09% move. We talked about a 10-11 delta on Wednesday together. That was the blue line and blue line. I don't know if that price actually was filled for $1. I didn't take the trade. That's what we talked about, in session. Similar to what I would have wanted to do, it's either one, kind of the defense trades. Today, for example, if we pull back, this NVIDIA sell-off candle high was 67.70. So if price pulls back, to find it and it stabilizes, starts to head back up, that's not a bad support zone. I think we are gapping a little bit higher on the futures market. So we have a 0.16 green. SPY is going to be up a little bit by a couple of dollars. We'll see what that amounts to percentage-wise. We might still fill this gap around 68.40. But plus or minus on the day, still pretty quiet, probably around 30 to 40 points. And then we'll measure out our 1749 VIX, which is a 1.09, just over that. So we'll go like 1.09, 1.10 for VIX levels. All right. And it does look like we have a lot less people showing up for a typical session, which I understand. I mean, markets are limited hours. It's travel time, family time, stuff like that for Thanksgiving. I get it. But there could be some opportunities today. Even in the shortened trading, I'm curious what either one, if we have a really nice gamma level to go after it with maybe a butterfly spread for double up, or two, an iron butterfly, where if price is going to be really quiet for the day, you basically sell, at the monies, you buy your wings and price stays range bound for the morning. and pull a couple of bucks that way. That might be a little bit easier than trying to take a lower credit trade on the outside. We'll see. But either way, just be careful on what you decide to do. Okay, we'll get prepped and walk through it. I'll give you some highs and lows. I'll probably throw in some broken wings, or some, I don't know, or some credit spreads. Even a 5 wide spread at the highs and lows that I calculate might be fine. And I'll be hanging out today until market closes at 1. So I'll do some portfolio combing, go review things A to Z, check some expirations. Most of my stuff is pretty solid until December expirations when they start to roll in. The price is pretty steady today. Our waterfall income trades that we have running, I think we have 11 open positions. They're just going to continue to build some more profit with time. So this would be a good weekend to let additional time decay. We have some December 16th expirations. Those should be looking pretty good for some profit management. Okay, let's have a look at SPX today. Oil. Official last trading day of November. So bye to that. December, we typically get the barrage of news in the first week, non-farm payroll, stuff like that. I think that's all been delayed for December. I'm pretty sure everything's coming out around the 10th. The 10th is FOMC, any type of CPI, PPI. I'll look at the calendar here in just a moment, but I'm thinking that all of the major US data has been delayed into like the 10th and after. So our non-farm, JOLTS, job opening, CPI, PPI, if that even gets released. So, all right, plus minus today about 29 points. Pretty quiet. So I'm actually, I don't know, I'm kind of curious like what a 10 wide iron fly or 10 wide butterfly would look like. If we had maybe 15 wide around current price, and maybe it's gonna be some risk on here, but if it was 10 wide, 10 wide, 10 wide, or 15, I guess. I would imagine you could probably take these trades for $1 to $2 risk. And, if you're 15 wide, that covers about 30 points. If it's centered here, centered here, centered here, you have 30 points, 30 points, 30 points. Markets at 29 in the day, you're covering about 90 points of movement. That might be overkill. But if we can end somewhere in the profit trap where, I don't know, maybe you're within a couple of dollars of a 15 wide, like potentially a profit trap that yields, $9 or $10 by the end of the day, that wouldn't be a bad trade. Depends on what the risk looks like this morning, since we have a shortened holiday trading day. But we'll have to see what that looks like price wise. Gold. Oh, silver crossing 50. We have new highs on silver. What? Yes, we are. Wow. Okay. Silver breaking some highs. Interesting. Gold's performing okay. Still think it has to pull back to this 200-day moving average. Bitcoin was back above 90K. We're at 92.2 right now. Nice little comeback. Still a lot of price action kind of prove that it's gonna, make a low. This might come back and revisit the lows. This might have some type of, hit all the moving averages that were broken. I mean, the bulls to me have to do a lot more work. We probably have to be above like 108 to 110 where I would say, yeah, I think we're bullish again. So we could come up to here. If this area stalls, I'm looking for kind of a double bottom or some type of pattern, pattern in here to have a higher low, and then a break on the right side of the trend line looks a little bit more encouraging. That would be, not that we haven't seen great comebacks for the year. It's not Bitcoin necessarily, but every time we've seen a pretty nasty flush in the stock market, we rebounded aggressively. This type of flush, does it rebound aggressively? Maybe. Fed watch tool still showing high probability they're cutting 83%, now 87%. So if the market's pricing in that, maybe Bitcoin gets a little bit of love. Is MicroStrategy improving? Not really. Bitcoin looks a lot better than MicroStrategy. I mean, it's up, better than being down, but still long ways to go here. All right, what else is going on? Um, yes, so S&P futures 0.14, NASDAQ futures 0.30, Dow futures 0.11, Russell futures 0.20, VIX is down 17.49, dollar index kind of right in the middle of a couple things. This would probably not be a good way to finish the year. If the dollar builds like so and makes a squeeze up, or doesn't even take that long, but just breaks these highs, if the dollar breaks these highs, it's not a good way to finish the year. If the dollar clears this low and works its way back down to the back of the trend line or lower, then I've said this the last couple of weeks. I think this is a risk on environment if the dollar breaks down. I think this is a risk off environment if the dollar makes higher highs. So that is one factor that I want to keep an eye on for the holidays, just in case. I think the markets will take a end of year reaction based on what the dollar does. Oil stabilized. I still need oil. I've got a futures trade that needs to stay above 50. Still looks pretty clear. Option chain looks pretty good. Natural gas 1456 up a little bit pre-market. 1511 previous highs. Wouldn't mind moving this back up. Well, I'll just keep the alarm there. I've got a 1650. So realistically, I'm just going to set another chart alarm here at 20. I'll move this 23 down to 20. And I'll start looking to maybe add a sell leg to my diagonal spread. How many of you joined me on Tuesday, Wednesday for my Anatomy of a Trade segments? We did almost 4+ hours worth of content on Tuesday and Wednesday. I didn't stream everywhere on Wednesday. I will post that video on my personal YouTube. But we had some notes. I'm going to turn these notes here, Anatomy of Trade. I know it's a lot of stuff, but I'm going to turn this into a PDF, and I'll try to have this available if anybody wants it. Actually, what I'll do is I'll just take these notes. Let me see if I can just save this section. So file, save as. And that was this week on the 25th and 26th. Okay, I'm just going to post this in Telegram. Okay, Tuesday, Wednesday, this week, over 4 hours. On some of my favorite and top option trading strategies. Okay, let's find those segments. Okay, and Wednesday session, it was posted on Zoom, so I ran with that. We did Zoom, and then we dual streamed on youtube.com/financial wars. So I'll pull that YouTube page up. What? Gotta go to premium to download this? Whatever, dude. Let's just go share. Oops. There we go. So if you want to check that out, somebody asked for the notes. There you go. Easiest way to get it to you, fastest way is just throw it in here with the text file. Okay, so good segments. What did we discuss? Butterfly spreads, iron flies, long calls, best practices, long straddles, short straddles, diagonal spreads, long strangle, short strangle, reverse iron condor, ratio spreads. Had a lot of questions on a lot of these strategies. So we broke them down, put them into context with an actual asset. I took a couple of trades during the sessions. One in particular was ratio spread on SPY that was on Tuesday. I actually really like that trade. I added that to my Project Options Edge. We talked iron condor, reverse iron condor, undefined risk, defined risk, best practices on call options. We did diagonal spreads as well. I ended on diagonal spreads. Yeah, let me show that one here. Diagonal spread, buying, longer duration, call option, and selling a shorter duration call option to lower the cost, potentially grab quicker income. Cost effective versus just buying long dated options. Cost effective versus buying 100 plus shares of assets. Long option debit plus strike price equals break even. So use the short dated option. Make sure we're in profit. Price moves higher than the short strike. Best practice. Price rallies above the sell call level. You can take profit by closing both long dated and short dated trades to avoid assignment. Or you can roll the sell call out in time for additional income. You can roll it out in time or possibly even up in price. Out in time, possibly out in time, and up in strike price for additional income. We walk through a Tesla example. Okay, there you go. Yeah, they were posted here. So I will add in, let me see, I did this one here. So let's take this one out. I didn't do Jade Lizards, covered calls, collars. Collars I've talked about before in, I don't know if it was a Gamma report. I think it was Gamma report when I did some collar trades. Covered calls I've done some segments on before. Jade Lizard, that was I mean, I'll tell you what it is. Jade Lizard is the traditional Jade Lizard is a naked put where you'd be willing to own the underlying stock and then a bear call spread. That's again, it's kind of a range-based trade. You're willing to own the underlying if price goes below. You're pulling some profit. personally, I would take a ratio trade 1,000 times over Jade Lizard. Here's an example. Just an example. Everyone, we want to say, video is a common example last or this week when we talked about some of these option strategies. So, let's throw a number out there on NVIDIA. Let's say by January 16th, and 49 days out in NVIDIA, we are saying, okay, you know what? Let's go to an out of the money price we're somewhat happy with. I don't know what that would look like, but we've got some deltas in here. So if we had like a 10 delta put on NVIDIA, 145. So if I do a naked put on NVIDIA out to January 16th, I can get $1.53 ish credit. Okay. So that's pretty good credit. There's about a 90% chance of profit. This trade stays out of the money, which gives me that full credit, Now, if you also think by January 16th that NVIDIA will not be at all-time highs, okay, I could pull in a little bit more credit here by doing a bear call spread. Now, the important thing is do not take on you don't want to take on necessarily more risk. I mean, there is risk in here if you price out a bear call spread and it's going to offer less credit. But here's what happens. So I'll just my trade thought is this: I'll take a put at a level that I think, yeah, sure. If I owned Nvidia at 145, would I be okay taking 100 shares if it was discounted by $40, $50? Sure, I guess. Right. If we're trading right here at 180 or 179, is price going to drop in the next 40 days down to 145? I would think it wouldn't, but it's possible. I mean, it'd be down another 18.6%. Nvidia, literally the largest company in the world, would be down 31% from the highs. Is it possible? Sure. But for the sake of this example, 145 at least generates some profit. It's below the 200-day moving average. If there's some dynamic support in here, do we have another push back up into like the 195 to 200 zone? So if I think I'll take some shares down here, but I don't think it's going to get back to the all-time highs, can I generate some more income? Well, let's find out. All-time highs are 212 right here. So let's say that I want to stay out of the way. So I'll do a 215 by 218, 219, 220. I mean, it's an okay trade, but that's a lot of risk. If I'm wrong, if NVIDIA blows through 220, I'm taking on, $5 of risk for what would offer me $1.97 in credit. So I still have risk on the trade. That max loss is because of the naked put side, not because of the call side. But the likely profit, if we stay below the all-time highs in the next 49 days, I can get a little bit extra premium. That's really what the Jade Lizard is. Some people like to use it. I personally would rather take a ratio spread. If I'm going to do anything naked put wise, I'd rather do a ratio spread. Lower my delta. I mean, look, the delta is actually still quite high. If I did just the naked puts, a 9.72 delta. If I add the bear call spread, it lowers it to a 696. So delta's still relatively high versus if I did that 145 naked put, it's a 972 delta. If I bought a contract in front of that, okay, 673. So if I did a 150 by 145, I lose some of the credit, but now my break even is way lower if I were to get assigned. Instead of, $14,300, my risk is $13,900 on a naked put. So anyway, nothing against the Jade Lizard. Somebody brought it up. I've used it before. I've also used, I'm trying to think, on shares that I own, I've used reverse Jade Lizards where you do a bull put spread, because the bull put spread, at least if price goes down, you have a hedge portion to the downside, and then you can sell a naked call, or I should say a call, against shares that you would own. So if you wanted to lower your cost basis, reverse Jade Lizard is not a bad way to do it against shares you own. So you can sell a call, collect some premium, also not mind getting the shares called away. If you wanted to take on more shares, you can do a bull put spread and define the risk versus getting a little crazier with the strangle. Okay. All right. Yeah. Thanks, Blake. David, you got that? Karen, you got that? Notes are in Telegram. So if you're in my Telegram channel, I'll post a link here. So Chris Pulver Telegram. There you go. Okay. So a couple examples. All right, we have 2 minutes. Pre-market gamma. Mark, I see your text, man. I will yeah, I'll send you the link. I had a couple of you ask me at Discord as well, so I'll share those links out today. Let's see what we have. So pre-market, um, I didn't get filled on Wednesday. I didn't get filled on a trade. Talked about the 10 delta that didn't fill. Put on my broken wing butterflies for defense levels at the top and bottom based on the VIX box. Didn't get filled. No big deal. Today this is all pre-market gamma, so 67.85 down to about 67.75, 68.40 to about 68.50, plus or minus in the days like 29 down to 20. No, let's wait on there. Let's go SPX. I think 28, 29 today was our expected move, plus or minus 29. So, I mean, there'd be some risk in the trade, but if there weren't any crazy surprises, that looking at some type of like iron fly or butterfly that maybe we can call out a couple levels here versus going super wide, maybe tighten up the risk a little bit. But I might just kind of wait and see if nothing happens in the first 30 minutes. It's kind of let price be price. So here's real-time gamma. Bit of a gap open. No major pressure to the downside right now. Sticky levels 40, 45, and 50. Let's see what it looks like. Let's see what we have for a. Did the VIX change at all today? 17.49. Still showing 17.49. I'm not even getting a reading on this. We've got the VIX 1-day at 14.74. VIX 30-day. There we go. There's a jump up to 18.52. Weird. Okay, so we got a VIX gap up here. That changes my calculation for sure. So 1.15, unless it's going to drop. So there's potentially high at 18.52. It's a 1.15, 1.16 VIX. $40, 45, or 50. All right, can we get to 40? What? That cannot be right. A broken wing call fly at 50. What the heck? There's no way that price is right. All right, I'm getting some jacked up prices here. I'm looking at a call fly. So current price is around 68.29. I'm looking at something where if we hit a gamma level at 40 or 45, that trade should only cost me like a couple of dollars. And it's just showing. I mean, look at the bid ask here. We have, I don't know, we just have either a really light volume, like bid ask is really wide today. All right. That makes me not love this trade too much then. Maybe pinning around 35 or 40. 40, 40, 55, and 25. All right. My prices are so effed right now. Is anybody else seeing the same thing? So if I did an iron fly, this is showing $30 of credit, and I'm only 15 wide. So that's clearly not that's not going to be a realistic price at all. A broken wing or just a butterfly call spread should be like $1 to $2 debit and it's showing $8 to $10 debit. Who's getting some messed up prices? Yeah. Thinkorswim's being weird. Mind Strange, says Catherine. Yes, yes. Issue came in earlier. Prices are messed up. Yeah. I was wondering if that CME data outage or power outage like has jacked up like everything price wise. Like these are literally untradeable. I wouldn't even know what to do other than put the price in where you know it's realistic. Like, and it's just not looking good at all. So, I mean, it's fine. Unfortunately, it just doesn't look like there's a good way to play this today if the bid ask and the broker prices are ugly. Now, this could all clear up in the next 30 minutes or so, and maybe things go back to normal. But if we're dealing with a major disruption for today's shortened holiday trading day, could be a good one just to sit on the sidelines. Would you open if there's no way it's going to fill? If I get right now, it's trading for 1750 credit, so that's a little bit more realistic. But still, bid at 38, mid at 1750, ask at 380 debit. Like, I mean, we're trading SPX. We should be seeing this thing within like 50 cents to a dollar from the bid ask, maybe tighter. If you go SPY, this should be like within pennies. Okay, let's look at a butterfly spread on the SPY. So if I change this to SPY, so SPY, thickest gamma level. I mean, that's pretty gettable. 684 to 685. Let's go 685 and then two wide. So buy the call, buy the put. I mean, that's not a bad trade, right? I mean, if this is right, the bid ask here, like this should be within like 5 or 10 cents, and we're talking, 80 cents wide on a SPY. But if I took this trade for $1.80, I'm risking $20 to make two. Like that's still a really good trade. We just have to get up to 184, 185 by the end of the day. So 238 to make, risking 60 to make 238. If we can stay there, get to 685 by the day. This isn't a terrible trade. Let me see if I can get 250 credit on this one. I'll take a small risk on the day. Let's try it. Maybe a 240, 250. See if this will fill. So 250 is not going to fill. Let's try 245. I'd be risking $55 on the day. $240. All right, I'll go 235 final offer. And I like the pin price. Short and holiday trading. Equities are done at 1. I'm not getting any fill. I'm way below the mid price right now, and there's no fill. It's not even asking for an unreasonable trade. I'm trying to pin the 685 and then going 3 wide and 3 wide. So mid price showing, I mean, bid price is 225. I've got a pending order at 230 that's not filling. All right, 225 is my final offer. All right, that's not filling. All right. Oh, there we go. So I'm filled. Well, that makes the day interesting at least. It's like everyone that says, "Yeah, I just like to do those gambling apps because it makes things interesting." Well, I guess we're going to get things interesting today. So I did take a trade. I did a iron fly on the SPY. I'm risking $74 to make 220. Actually, potentially make $3. So if price is somewhere in this, like, I guess it has to be above 682. So technically my break even would be 682.75. 6.74. So for me to make the most money on this trade, if we're coming up to 684, 685, 686, that little window is going to be what pays me the most. But spreads are definitely jacked up today. Okay. The other trade, we've got a. I mean, if I'm going to do this, I might as well make it worth my while. Um, so I've got a potential, 3-1 or better on this one. And the other trade would be the pin price around my SPY gamma, which is around 679. So I'm going to throw in a second trade around 679 and also put a little trap in there as well. So it goes 679. I'll pin this at 82 and I'll go down here to 76, collect about the same. So I have about $70 risk on each one and see if I can land this in a profit trap by the end of the day. Okay, so we'll throw this in as a bonus trade. I don't know why it's too hard to read. I should be pushing this thing in like 720 or 1080 definition. So I've got trades in. Look, this is a totally optional trading. Optional trade. This isn't going to be for official service or anything. I'm doing SPY. The bid ask on SPX was really wide this morning. I'll watch that. I'll see if things like tighten up a little bit, but here are the trades that I'm in. So 11/28 expiration. I'm basically doing 2 iron fly trades, hoping for bigger war than risk by 1 p.m. Eastern time. I will manage the trade into end of day. Okay. Just to avoid any type of weird, because it is a combination spread. And so if it's inside these strikes, iron flies on SPY may get assigned. It shouldn't, but it might. So to avoid that, I will manage this in the final, 30 minutes of trading today, 15 minutes of trading today. So expiration 11/28. Selling the 679 call, 682. Wait. Sorry, I totally did that backwards. This is the one I did. 685 was my first one. So selling the 685 call and then buying the 688 call. I'm putting this in the Zoom chat for everybody. Selling the 685 put and buying the 682 put. And that trade was for 226 credit. So a 74 max risk. And then the second trade I added to that was the pin price at 679. So sell the 679 call, buy the 682 call, sell the 679 put, buy the 676 put. That one is a little bit cheaper, 240 credit. So $60 max risk. Two trades. I'll throw this in just for fun. Okay. So that's the trade. Ideally, if price is around 685 by close today, if price is around 679 by close today, somewhere within about $1 of each strike. So a 684, totally fine. 680, 686, totally fine. 680, 678, totally fine. We'd like to get it pretty accurate within either one, hitting the 685 gamma, or two, sticking to this positive negative gamma. So we'll see where the day settles. If they're net positive, like if I can pull out $50 or $100 on the day, then I'll take it off for a profit. Katie says, took your 45 by 50 call trade. Should I sell this morning? Katie, how far was that expiration? That 45 by 50 call spread was way out there, right? I did like a 2027 or 2028 silver call spread. I was way out there for duration. So I'm not in a hurry on that trade at all. Double check the expiration. I'm pretty sure that trade is out to like 2028. At least mine is. SLV. Yeah, that one's out 780 days. So there's lots of time on that trade. If you're near term than that and it's showing profit, yeah, there's no way to. I mean, why would you manage that trade? It's showing negative. There's a lot of time you need to get this thing to stay above $50. So I'm hoping by 2028, silver's at spot silver is up $100 and or the SLV will be up to 80, $90. So I'm just it was more of like a long term spread. All right, let's go 79, 79, 82, 76. This is a iron fly. 1, 2, 3, 4. Iron fly. So what I'm looking for today is between these two, just having a net profit at the end of the day. Yeah, SPX it does seem really really messed up today. So if that is the case, just be careful. I mean, look at this. All this stuff is weird. The VIX started out at 18.5. It's down to 16. Like this is not a day to be like, wait, this is all messed up. What's going? Like, don't force a trade today. I am forcing a trade on one of the most liquid assets in the world. SPY is pretty liquid. I don't think we're going to get a lot of crazy price action today. If we do, I'm hoping that whatever is coming in through options feeds and broker platforms and open interest and volume, all these strike prices are still reliable. Worst case scenario is I would lose like $130 today, which isn't going to be fun, but certainly better than forcing a trade on a, iron condor that's going to cost me 400 when price doesn't give me a good fill. So anyway, even with this VIX, it's like I'd be very cautious on doing anything SPX. I think, SPY is an option just because it is like the most heavily traded options market. Every single day, SPY is like the most liquid. Yep. Yeah. So I saw the bid ask was really wide on SPY. I think everything is messed up on SPX. And it was even wide on the SPY. I mean, we were looking at like, 80 cents to a dollar, and usually it's within like 5 or 10 cents. So all the prices are pretty jacked up today. So just for fun, let's take a look at something like this. If I did let's just do a daily profit play. So if I go 5 wide at 68.60, and let's go 5 wide at 75. I mean, this is a 5 wide spread, and it's showing a mid price of $1.85. Have we ever gotten $1.85 for a 15 delta on a 5 wide? Never. So there's no way that price is going to fill. 210 on a 5 wide, there's no way that's going to fill. You'd have to be trading that thing at like a 30 or 35 delta for a price like that. So these are way off. Okay. And I mean, it's okay. It just kind of shows us like something's clearly off with the market today. It's a short holiday. There's messed up data. There's messed up pricing. Just don't force anything. So, one thing I will consider, and this would be cost effective, but let me see if I can sprinkle this in. Let's see, we're trading at 680. It's like if we have like an absolute nothing burger today. I mean, my pin prices are right here. Okay, so I want you to make sure you understand what I just did with these SPY trades. If price is close to this area at 685, I can make some good profit. I can make $2 and what? $2.26. And then down here, I can make $2.40. Is there risk in this trade? Yeah. If price is around 682, it's going to be, I could probably manage like a very small loss, but because my credit is going to be pulled from this and pulled from this, I don't want price to be at 682 or 681. I want price to be at, I'm going to put a green dot here. Okay. I want price to be at 684, 85, or 86 on the upside. I want price to be at 80, 79, or 78 on the downside. That to me, for sometime through the trading day, is going to be my best case scenario for how to make the most money here. Okay. But what I was going to say is, should I sprinkle in something in the middle? I mean, I can if I were to sell the 81, sell the 83, and then sprinkle it in like this. I mean, I have some risk, I have some profit. It's, just under a 2-to-1. It's kind of a wasted trade, but it keeps me kind of trapped in the middle to at least offset some of the risk. But now I'm taking 3 trade. It's a little bit of overkill. I'm just going to take the chances on this being pretty surrounded. As long as price, and I don't know this, but as long as price is less than 688 or greater than 676, and we're kind of oscillating through the day of maybe getting to 685 or getting down to 679, I don't care what direction. But if we get up to 684, 5, or 6, trading closes today at 1 p.m. Eastern time. So within that final 30 minutes or so, if we get a move up to like 684, 685, I will probably manage some profit. Okay. They're not condors. They are iron butterflies, because I'm selling the middle and then I'm putting a profit trap above and below. Okay. So I'm just gonna build this trade out on option strat just to show you what it looks like, and we can kind of track this through the day. So I'll build out a iron butterfly on the SPY. Today's expiration is the 28th. I did the 85. So 85, 85. And then I bought the 88 and the 82. So there's one iron fly. Okay, so where's my risk at? If price is too low or price is too high and it's not in this like kind of profit trap, then I could lose. I'm going to add in another buy put and sell put, and then add in a buy call and a sell call. That one was a 79 and a 79, and then an 82 call with a 76 call. Okay. So by expiration, this is what my trade looks like. If price goes absolutely nowhere, that's my worst case scenario. I could risk about $130 today if I'm totally wrong. If I am, getting price inside this profit trap, so this is even correct for the 4 p.m. because market's closed today at 1 p.m. So I'm curious in the options chain if we're going to get, faster decay and faster profit traps, because by 12:30, 12:45, 12:50 today before equities close, are we going to see, the profit trap? Now, that also makes the middle, if price is a big nothing burger today, this middle will sag and be a weakness spot for me. So I do want to see some type of price action today. I want to see something down to like 678 or 679 or something up to like 84, 85. I don't know what we're going to get, but if we get something, hopefully this offers up some profit. I'm curious here, like before this starts to sag, if there's any way that I could hit this thing where even the trade between the two of them could offer a net like $10, $15, $20, that might be my safest trade on the day. But profit trap by the end of the day is kind of what I'm shooting for. Is can I get prices, in my profit trap? That's where I'm getting like a 3-to-1. Instead of an iron condor for the middle. I mean, you could. You're just not going to pull enough credit for the iron condor to like offset it, though. I doubt I'm going to get $1.30 on an iron condor. Because if I did iron condor for the middle, what you're talking about selling the outside and selling the outside, you're going to see those premiums are not nearly enough. Right? If I do a call side at, look at this, a 689, like these are offering like little to no credits. Yeah, to me, that's not even where you're going to pay more in fees than you are credit. So that's not worth it. Yeah. I'll take my chances on a little trade today. We had audible, from a weird price action. SPX fills where the bid ask was really wide. There clearly was some type of disruption. That's okay. So I audibled to if I'm going to trade options, and even despite the weird bid ask prices, SPY is still the most liquid instrument in trading options by far. So I audible to SPY. We're throwing a couple profit traps in. We're risking way less than a typical iron condor, and we give ourselves maybe a 3-to-1 opportunity. So this one is about 4-to-1. This one's 3-to-1. Do I get one of them right? If I do, then I can walk away with profit on both of them. I can win one, lose one, and still have profit on the day. Okay. And like I said, I wouldn't be surprised if prices are going to normalize in the next, like 30 to 40 minutes into trading. It's not a surprise. But now that I'm committed to the SPY, I don't need to throw anything on NSPX. I'm good. So the VIX also got jacked up as well. VIX at 16.6. We had a weird VIX spike at 18.5. Just for fun, I will throw it out there. 18.54 is a VIX spike. Let me see this exact high. 18.52. So 1.15, 1.16. Okay, that was from, I think this is the screenshot from 11:26. We closed 68.11. I'm going to put quiet melt up price action. I don't think prices were contained from the open on Wednesday, Wednesday, right? From here, 35. They were actually quiet melt up price action. Ultimately settled within the plus minus expected move. Okay, 11:28. Let's recenter this on the close here around 68.11. So that close was 68.11.75. There's a VIX box calculation based on an 18.52 VIX. Again, then this is a weird data feed, but I'll keep an eye on this. So 18.52. Let's go. So we had a slight gap open today. Let's take the gap and go 1.52 higher. That's so I don't think we're gonna go. I don't think we're going anywhere today, honestly. But you never know. 1.52. 69.26. Okay. And from the previous day, down 1 point. Wait, did I do that wrong? Oh, yeah, it's 1.15. My bad. So from gap open, 69.02. I'll put 69.03. All right, 69.03 is the high. And then take the previous day's close, 1.15 lower, 67.32. So unlikely that this will amount to a fill, but in case it does, a little broken wing wouldn't be the worst thing in the world. So I'm going to throw this in. going to set a chart alarm on the VIX at 18.55 in case this does break. If there's some volatility, somehow coming back in the market today. But otherwise, I'll just set an SPX trade. Looking at a high around 69.03, so I'll do a 69.05. Give me some wiggle room. 69.05 by 10 by 20. Give me $1 credit. Very unlikely going to get filled. It's a 1 delta right now, so we'd have to have like ridiculous price action. In fact, what I'm going to do, because my risk on the iron flies for the SPY is $1.30, so I'm going to ask for $1.50 on this trade. Actually, I'm just going to ask for $2 and skip another strike. Okay. And then on the put side, 67.32. As long as the VIX doesn't break higher than 18.52, I'll go 67.30 on the put side. 67.30, buy, sell. That'd be my skip. I'm going to skip one more and put this in for $2. Okay, so a couple broken wings. Those are unlikely going to get filled today, but in case there's some wonky price action up or down, we might get filled. All right. What are we doing? Cyber risk on SPY. Yeah, I'm going to manage the trade by the end of the day, just to be safe. What's your target on the SPY trades? You got it for 245. Yep. So if you pulled in 245 credit, Katie, then you want to be managing that for a lesser debit. So the goal is, if I look at my SPY here, iron fly, as long as one is offering more profit than the other, then I try to manage it for a net winner. Okay. So this one for price right now it's at 681.60. If we get up to 683, 684, that's looking a little bit better. We don't need much. It's like if I'm risking $60 to $75 maximum risk here, it's like if one iron fly that offers 240 and 220, if one's offering like $75 to $100, I can make money today. So it doesn't have to be a full profit. Full profit is going to be, you've got to be spot on at the 679 strike. You've got to be spot on at the 685 strike to get the full profit. Okay. And that was going to be like near close today. So like I said, because prices closed today at 1, equities closes at 1. That means our options market's going to close as well. We will see where things are at for the day. It's going to be, I'm not going to say like a crazy, aggressive session, but it's like, I will manage the trade by probably 12:30 p.m., 12:45 p.m. And I'll just keep an eye on this. It's like between these two, is something offering me, 30, 40, $50 a profit today? If so, then I'll take the profit. So if I just look at my P&L that's open, if one is offering, let's say $50 and the other one's down 15, I might just take the profit. So if I open it for a 240 credit, I'm trying to close it for a lesser debit, right? So one of these is going to be a losing trade most likely, and I'm just trying to keep the winner bigger. That is the plan. Okay. Both flies in for Thinkorswim pending for $1. Okay, those are the broken wing butterflies there, David. Yes. Okay, wacky prices all over the place. Go look at some of the bids on waterfall open trades. Yeah, let's take a look at those. I mean, showing profit. That's good. These aren't like wacky. It's just showing profit. But I would imagine, I mean, January 16th is still out far enough that this looks about like what it was the other day. I mean, we had profit on every open waterfall position on Wednesday. I mean, prices were up on Tuesday, prices are up on Wednesday. Everything was showing some profit. Yeah. I mean, the only two that I would consider closing. This one's not terrible. This one's not awful just because at 6140 is a high enough strike that I mean I'm pretty sure this is below the 200-day moving average. So it's up 60%. We're up $30 out of the 50 credit. We have a profit trap in here, but question now is it worth closing? I mean, if you want the buying power back, close it down, grab $30. You're closing this one down for 60 to 65 or $70. That's actually a pretty good trade to close this one down. This one's up. If this is accurate, again, the strikes are much lower. 59.90, 59.75 is my strike. That's our sell put level that we need to pay attention to. If I'm up 40 out of the 50 cents, that's pretty good. 80 cents of that credit, like that's not a bad one to pull in. This one here, same thing. 75 cents is showing up 55 cents. Like if it closes there, that's not a bad trade. Do I have any working orders here? Um, the higher strikes I'm trying to close out for this was a 25-cent debit that's pending on a 50-cent credit. This one I think was which one's the 6240? This one filled for 70. So the 70 cents I'm going after a 20-cent close. Yeah. I have a feeling that if you're trying to close these today at these percentages, it's probably not going to fill. If I'm in for a 75-cent credit trying to close it out for a 20-cent debit, I don't know if it's going to fill. You can try it if you want to close it, but I don't mind just hanging on to these a little bit longer. Oh boy. Am I actually in profit on Ford? Wow, look at that. Unbelievable. Covered calling some dividends. I think my break even on Ford is like $8 right now from all the options I've sold over the years. Tesla back to 427. Okay, good. XSP, that's another waterfall trade. All right. So goal for the day, looking at some iron flies. We'll see if we get a net profit on the day. It's manageable risk wise. If price goes nowhere for the day, that's not great. Nowhere is a bit of a dead zone for me. Okay. So, I'll make that decision. I mean, if we're going to do absolutely nothing today, then that is a bit of a weakness because I have an iron fly like this, and then I have an iron fly like this, and in the middle, there's risk. So by the end of the day, I do have that risk. It'd be about $130 maximum risk. Okay. But I can make 226 on one of these on the upside and 240 here. So it's manageable. Um, I'm not going to risk a full third. I mean, unless price is literally here for the rest of the day, then that's my risk. But if we get a little bit of a drift today to some fresh highs, 83, 84 gets this thing a little bit more promising. 84, 85 is pretty ideal. If we can come up and find, these higher gamma levels. Plus or minus on the day, what do we see, like 28, 29 on the SPX? So if we get like a $3 move, yeah, I mean, I think 84 is doable today. Hopefully. Hopefully. All right. If SPX is back to normal, cool. That's fine. Am I going to jump in and do a daily prop play for SPX? No, I'm not, because we're only looking at like a plus minus 25 or 30 points in the day. So I'm just frankly not that interested. We can come back and revisit this when we're back to a normal trading week. We'd have 2 full trading weeks ahead. Well, actually, we have more than 2 full trading weeks. I'm saying we have the first week of December, which is undisrupted, the second and third week in December, which are undisrupted, but all the volatility is going to kick in starting on the 10th. Because if I'm looking at the calendar, I don't think we had anything crazy this week with news. Today, no major news. Let's go to next week. Next week, any high impact news? PMI numbers on Monday. Wednesday, you're getting your ADP non-farm numbers, another ISM number or PMI number on Wednesday as well. Thursday, unemployment claims. Friday, so it's not non-farm. Non-farm is going to be, I believe, after FOMC in December 10th. So Friday the 5th, U of M sentiment, core PCE. That's an interesting time to drop that. I don't know what data point this is. Like monthly core PCE. Is this a September core PCE? Is this an October core PCE? I'm not really sure. But it's a full week of trading, just not crazy heavy news like, oh, ADP. It's like, nobody really cared about ADP until they stopped giving us non-farm. And then ADP is like, we're going to come out and do, ADP every week. Okay. I mean, we'll see what it prints. I think that's the weird part is like now we're in a phase where I think the news is like it matters, but it's not going to be the catalyst to like drive the market one way or the other without having a bigger story attached to it. It's just going to be a data point. What was the 600 by 605 expiration? I'm not even sure what that trade is, David. What are you talking about on the SPY? 600 by 605? I don't know, man. Tell me where it is. SPY, I don't have a 600 by 605 on SPY. So was it just an example trade? It is showing. These are my SPY trades. Oh, this one you're saying. This was a strategy 1 that we put in pending, and it expired today. So it's not filled. We were asking for a 2. So this was based on a dip. We don't have SPX. I don't have a trade on SPX today, David. Make sure, look, when you're sending messages, please send them to everyone. That way it doesn't look like I'm just talking crazy. And plus, we have a couple Davids in the room and a couple Mikes in the room. So make sure when you're sending messages, put it into everyone versus hosts and panelists. So David P, SPX today. I don't have a trade in SPX today. And that SPY 600 by 605, that was a pending order for waterfall strategy one that was based on a pullback when we were pulling. We were expecting a pullback to, honestly, I think I took that trade in here. That would have been a pending. So I've been, pretty vocal about this 50-day moving average for a while. And that would have been something like this. When this pullback happened, I put in a 600 by 605. That would have been right around this area on the SPY. And I was going out towards like November, December, thinking we can get some holiday trading in. And then it didn't happen, didn't happen, didn't happen, didn't happen, didn't. So it's not going to fill, which is no big deal. Okay. So, I mean, now that I see this, I just can't, I'll cancel it. This trade's not going to fill, obviously. So cancel. These are the trades from today. All right. So anything else crazy for today? Not really.
Tell you what, the markets aren't looking too bad for after last night. Had
Yeah,
the
well, I
futures
think
shut down.
everything got disrupted in futures last night. Yeah. I'm just glad they're back and prices have normalized a little bit. It is obviously nice to see just kind of more drift, having like another, for the most part, just green day, pretty solid. Let's go heat
I
map.
mean, there's some good movement. I just sold my silver calls. I was in shock.
Oh, yeah, I mean, yeah, that's not a bad. It's good. I'm like long term silver gold after. I mean, dude, for 3 years I rode silver and gold, and so now I'm just dipping my toe back in the water on establishing another core position. Um, I well, let's talk silver for a second. What are you doing in
I'd
silver,
love
Blake?
to.
I mean, all time highs is
Right now, I've
another
got
great
some.
sign.
Yeah, I've got calls on it out to. I mean, on SLV. I
Okay,
think that's like 55 call.
okay. So you just said out of the money. What's your horizon here?
Oh wait, not out of the money. What did I just do?
Are you
SLV.
selling calls
Oh
like you
yeah.
own shares and you're selling calls?
No, I'm just buying
Just
calls.
buying calls.
Like
Okay.
I bought the 52 call on Friday for 50 cents and now it's at $1.37. So I had to scale out of that.
Okay.
And then I added to the 55 call, which are like some leaps.
Gotcha. Gotcha. Okay. I mean, dude, if your horizon is, out 6 to 12 months, I love the trade. So
Yep.
my next plan on like silver would be, I literally have a buy level that got filled in here, and then I have a buy, and a buy, all pending orders to buy shares. Um, that's it. Like after riding this thing since COVID, and then adding a lot more in 2022. Uh, I've taken I told myself, I'm going to try to get silver back to all time highs before I take profit. And it did. And that just happened.
Mm-hmm.
So now that I'm dipping back in, what I want to see is, I don't know what this looks like, if this is going to be something along these lines. And I'm just putting this out there. I'm being somewhat skeptical just because of we have gold and silver. If you look at them together, gold and silver, when you trade, gold versus silver, this range has been pretty reliable for the last 3 years. So silver is now reaching the bottom end of this range, which tells me that gold might get the upper hand, which means silver poking these new all-time highs and kind of running a little bit ahead of gold. I might see silver pausing here. I might see that gold could pick up some slack. I might see that it's hard for me to be super bullish on gold, especially when this bar count is so long from the last time we touched the 200-day moving average. This is like the second longest ever. We're 540 bars away from the 200-day moving average. The last time I got that long was back in 2009, 2011, and gold crashed 30% when that happened. So this isn't a crash talk. This is more like, to me, price is going to be To me, it's not a runaway stock or a runaway asset. To me, this is, everyone's excited about gold now, but it's probably going to enter another accumulation phase, I would think. And I don't know. I mean, dude, if silver surprises the upside, awesome. But to me, it's like I'm looking out at least a year or two on silver,
I
willing
agree.
up to 5 years, 10 years. It's like just have them, like have them in the portfolio. I think silver and gold is a great allocation. If I like a trade in particular, I'll trade SLV with like some type of income based trade, or I'll trade SI for silver futures or GC for gold futures. And those would be like options based income trades. I'll do debit spreads on futures, credit spreads on futures. Those are fine. But overall, it's like I want to own SLV, I want to own GLD, and futures would be kind of like the impact or the income side to like juice the profits. Are you trading just SLV, or are you trading SI, trading futures?
Well, right now, just SLV. On the side, though, I trade GC, which
GC.
is
Okay, gotcha.
the gold futures,
Yep, exactly.
which I
Cool.
like trading those. Those move, but it's sometimes hard, with a smaller account
Yeah.
because you have to
Do you
risk
have a
100
micro?
bucks.
What's do
Yeah,
you, do you have an MGC? Can you trade a micro?
yeah. I normally trade a micro GC, and I risk about 50 bucks a trade, which usually gives you some leeway. Um,
Yeah.
if you risk 25 or 30, you're just going to get stopped out way too
Gotcha.
quick. You have to be
Gotcha.
like precision.
Yeah. What is the so $50? I mean, you're getting, what is that, like 10 to like what's the GC cost like per tick?
It is expensive.
Okay.
Um,
So micro is down to what? Is micro like a tenth like it is in S&P?
it's more, I think.
More. Okay.
Yeah, it's more expensive. Like because I can do like 5 points on the S&P, which is what 20 ticks.
Mm-hmm.
That's only 25 bucks. But like five
Okay.
points on MGC is $100.
Interesting. Wow.
Yeah, it's like when I trade MGC on my Trade Evade account, I got to be heads up because anytime that thing moves against me,
Yeah.
I need to be ready to either cut or because if it goes against you too much and you got too wide of a stop, you can blow your account pretty quickly,
Sure.
even with one micro.
Let's see.
I mean, it's up half a
Uh,
percent right now.
yeah.
I mean, the entry would have been last night after they reopened because it just took off and ran.
Let me see here. MGC futures per point.
Yeah, she's a mover.
Yeah.
What is it per point? It's probably like
It's
five
showing
bucks.
shows about $1 per tick.
Oh yeah.
See. Again, with the futures disruption, I don't know if I would be like jumping all into futures trading this morning if it's a little
No.
little wonky. I just
If
let
it
it come
helps,
back over the weekend, come back into Sunday night or Monday.
that's right. I'm staying
Yeah.
out today.
Yeah. That's not a
I'm
bad plan.
strictly supporting everyone today who's trading. I'm here
There
for
you go.
moral support.
There you go. Cool. Well, here's what I'm seeing real time. This is SPY real time. Can we drift up to 84, 85 today? That is a fly that might work for us. If we come back to this positive negative gamma level at 679, that's totally fine. Let's see what happens. So either we get some drift for the day. 83, 84, 85 is premium profit for the iron fly that's pinned at 85, and then 79 if we come back to this positive negative gamma. That's the other side of the trade where it's like I've got the two traps. So either get me here, get me into this window, or get me into this window at some point today. If it's enough to offer, more profit than risk, I'll probably just close the trades. So considering one of them is, offering $2.40, the other one's offering 226. If collectively I can get like a $50 profit on the day, like I'd say that's a win. Making
Hmm.
an improvised move to like, okay, SPX trades are a little crazy price action. Futures are shut down. SPY super liquid. Let's see what we can get on the SPY. It's a pretty cost effective trade. And what are we showing here for current profit? Let's go SPY for the day. Right now, iron flies Down 8, up 5. Super exciting stuff, isn't it?
It's so
So,
exciting.
no, I mean, but the reality is by, 12 p.m., 12:30, 12:45, before this day closes, it's like, there's a couple $100 to swing in for profit here. Now, I don't know. I mean, I'd say for taking a trade on a short and holiday trading day, um, having crazy price action, you're not taking a ton of risk. And I've got a 3-to-1 and a 4-to-1 opportunity, and basically prices surrounding my gamma levels. So I have a 85, which to the upside is 88, to the downside is 82. So kind of in here, like that's one profit area. And then 79 is also at 82. So I'm going to overlap this one. So I'll do 79 is my pin price. 82, I'll put half of this in pink because that's my other half of this trade. And then down to 76. So if price is in this window, I at least have an opportunity for some type of profit trap to start to fill up later in the day. The issue is if it's right at 82, that does me no good because I have credits where my break even is technically a little bit lower here and a little bit higher here. So
Mm.
that's like my weakest, like right now between like current price. This one wouldn't kill me if it stays where it is. Like this put side might offer a little bit of profit, but the best trade is going to be, into like 80, 83 is not bad. I'll still get like, I don't know, 100 and some dollars out of that trade. So I should be able to net a winner here today. But I guess as long as one is offering $100 of the max 240 or the max 220, that's a pretty good win because the other one is only risking like 60 or $70 respectively. So if I can get one trade to offer $100, take the loser for 70 or take the loser for 60 and just walk away net positive on the day. That's going to be the plan. We'll see.
That'd be a good Black Friday win right there.
Yeah, it's not bad. I mean, it'll get me my Amazon Black Friday that I browse later today.
That's right. I was gonna say I'm gonna do a little bit of shopping at some point.
Yep. Gil said, I'm seeing your question here, Gil. The SPY is trading at 681, but the put is higher. Um, yeah, but remember the way that we structure the trade is the put and call that I'm focused on. These are the prices. 685 is the important level, and 679 is the important level. And I'll explain. Let me pull up Telegram and I'll walk you through this. This pairs well with what we did last. It feels like last week already, but it's not. It was Tuesday, Wednesday. It's funny how like
I
one
know.
day out of the market just feels like it's totally a different week now.
I felt like
Um,
it was Saturday, but today was supposed to be
well,
Saturday or Sunday.
my fiance last night was like, "You play Fortnite with your buddies tonight?" I'm like, "It's Thursday. It was Thanksgiving." She's like, "Oh," because usually every Friday night around like 9 o'clock, I'll play Fortnite with my buddies for an hour or so.
Oh
We've been
yeah.
doing that for like 8 years. So anyway, we're just big nerds and kids, I guess.
Hey,
It all started because of my nephews. I played Fortnite with my nephews when it first came out, and it's just crazy. Like that game has
it's
kept us
fun.
like it's kept us connected. It's kept us talking. Like every week regularly. It's been kind of nice to just have an excuse to hang out every week, even though
That
we're
that's
miles apart.
that's what you need though. It's
Yeah.
a fun game too. I'm not gonna lie to you. People diss
Yes,
on
it
it, but
is. It is pretty. It's pretty amazing.
it's fun.
Oh, what's you like Rocket League? Here, we'll do that for Fortnite. You like this game? You like just build more. You like Minecraft?
Yep.
We'll build it for Fortnite.
I know.
So there's like just come play Fortnite. We'll just make every game better.
Give me an octane.
Yeah.
Oh, you don't.
All
Oh,
right.
you want to come back to life? We got new game modes for that.
That's right. I mean, even all the Call of Duty games started putting game modes that are exactly like Fortnite. There you go.
Yep,
The battle
that's
royale
right.
stuff. All right. Anyway,
All right, go ahead.
nerds. We're
Yeah,
nerds.
we are, man. Talk
Okay.
all day about
So
games.
the 680. So for Gil's question, 685, 679. Look at how this trade is constructed. Okay. Sell the 685. Sell the 685. For an iron fly, what that is me putting the 685s. Those are my pin prices. So that profit trap looks like this. 685 is the center of my profit trap. So price is in and around 685 by close today. This is my risk if price is too high or too low, but this is my max profit. So I'm selling the 685 call and I'm selling the 685 put. What this combination trade is you're doing a basically it's a bear call spread that you want price to stay below 685, and that's max profit, right? And then a bull put spread, and you want price to stay above 685. That's max profit, which is why the pin price is 685. So it's pulling in, two credit spreads that gives me a high credit versus a low risk. And as long as price is hanging out around this like 84, 85, 86 area, that's going to be offering, more profit than risk. That makes sense, Gil? And so on the downside, same thing here on the 679. A 679 call by 682 call, that's a bear call spread. I need price to stay below 679 to make money on that trade, right? But then a 679 put that I sell with a 676 put is a bull put spread. I need price to stay above 679. And that's why this builds out with the combination to have that's my price that I want price. That's what I want my price to actually stick to by the end of the day. So when you combine, two credit spreads or two debit spreads or, a credit spread and a debit spread, they build these fancy little profit traps on the options charts, but just deconstruct the trade. So, you're asking about the SPY 681. The SPY 681 is, I don't even have a 681 strike, right? So we're trading at 681, but my 685 put and 682 put is an in the money bull put spread, technically. That's an in the money bull put spread. So what happens is the broker's like, well, if Chris is going to take a trade with a 685 sell put, we're going to give him a lot more premium for that trade. So the 685 minus one, that's a sell put, and then a 682 plus one, that's a buy put. So I have $3 wide. I'll show you what this trade is offering. This wouldn't surprise me. This is offering like, maybe $2 of credit for this trade. Risking one to make two. Let's see what a price is out to be. If I go SPY and I just sell the 685 put and I buy the 682, the broker says that I can have this trade for $2.25 credit. So I'm only risking 75 cents to get 225, but to get 225 in the trade, where does price have to be? Price has to be moving up in order to get above my 685. So it's offering me more profit. It's offering me low risk, but I'm getting that higher credit because I'm in the money. So the broker's yeah, you want to take the 685 put, go ahead. But there's, only a 41% chance that it happens. Sure. So I'm pairing that with the bear call spread that is hopefully, going to pull in kind of the peak opportunity. So I think on the 85, it's offering 216 to, I got filled on the trade for 226, and that's a risk of, what's my risk there? 74 cents. That's the most I can lose. And so if we're anywhere between 84, 85, 86 today, we're probably going to see some net profit on the day, which I'm pretty happy with. So we'll see.
Good.
Yeah, it'd be nice to take all things considered for today's, weird session, which is, futures was shut down. VIX had a weird spike, little to no volume. If we get a net winner on the day, like, I won't be upset by that at all.
Yeah, that would be good.
Because I could have also said
names
no trade.
Open.
We got like 61, 62% of stocks going up today. It's decent. It's got filled.
MSTR pumping.
I think. Hang on a second. I just had an IBIT trade close. Let me see something here. I might have just had a trade close for profit on IBIT.
I think I saw Bitcoin pumping.
Yeah. Well, Bitcoin had a big rally earlier this week. Okay. So I've got an IBIT trade that closed out. Let me double check on this one. So IBIT here. Let me check.
Because when the futures were closed last night, I was like, what am I going to do? I was like, well, I better watch Bitcoin.
Yeah. Okay. So I had a naked put combo. Is anybody in my project options edge? Because if you are, this trade just closed out for profit. Now the chance of assignment on this was slim to none. Even though Bitcoin was falling, we're back up to 52.50. I had a 31 by 30 by 29 by 28. These are all naked puts. This is a January 16th expiration. I pulled in $4.69 in that trade. It's been open. Now, keep in mind, like, this trade had some time. We were open for 218 days, but with 50 days to go, $4.69. I just closed it out for a 55-cent debit. So that gives me $414 profit. And now there's no assignment risk, and now we get some buying power back.
Nice.
So that's a nice winner for Project Options Edge. I also still have some shares, and I'm hanging on to those for right now. I've been in IBIT like pretty much since it became an instrument. In addition to having my Bitcoin stuff from like 2017. But this one, 51 by 52 bull put spread. This one might be, it's like, I don't want to take more shares right now. I've got a bunch of shares in my IRAs. I've got a bunch of shares for the overall portfolio. I don't need necessarily more shares. Bull put will keep it. What's the most I can lose here? I've one, $46. Okay. No big deal. If we get above 52, that's fine. We're at 52.63. If it stays where it is, we'll be okay on that. Anyway, I'll close this one, update this for Project Options Edge. That was a nice little winner. 469 credit, closed out for a 55-cent debit. I'm happy on that one. I'm going to see. I think this is in a lot of other accounts as well. Naked put combo, 469, 418. Like, that's the trade. So I can close this out anytime for a nice little winner. I might end up taking by December 31st. Bitcoin is either going to pump hard to the upside, or I might be taking on some additional shares with this combination, 59, 6, 3, and 0. I might be taking on more shares. And that's okay, because I will use this chunk as a this would be potentially, if I get assigned all 400 shares, then I'll just immediately sell a covered call at the break even or better and pull in, maybe $500 to $1,000 of income. This one, I don't think this has a 98% chance of profit. I think we're going to be okay. I might just let this one ride for another 40, $50, but profit's not a bad thing.
98% chance. I think I'd let it ride.
Yeah.
That's a pretty good odds.
No, they are. And that's honestly a lot of my trades for Project Options Edge are that way. It's like we have trades that are like 95% chance of profit, 90%. And that's even with the VIX that spiked up to, 20, 25, and 28. We still have like a 98, 99% chance of profit. So yeah, I think you can let a lot of those ride because it's, again, you don't have to, but what I will say, there's a difference between letting it ride and then seeing what profit is available. Like, of that 469 credit, I only have about 40 to $50 remaining. So for me, is it worth letting it ride for another, 30, 40 days? Not really. For
Not
$40,
really, right?
it's like, for 400 shares, it's like there's a lot more capital tied up in that buying power for those naked puts than it would be if I just accept that I can make $415, take the profit, and then allocate, whatever. I'm trying to think, 30. What was that combination? I'm probably going to free up. Where's my IBIT? I'm probably going to free up, maybe 10 grand in buying power, 31. So let's just find the break even here. It'd be 28, 29, 30, and 31 divided by 4, 29.50. So, on a cash account, I'm freeing up about 11.8 in buying power. On a margin account, probably $3,000 or $4,000. That to me is worth freeing up that buying power versus losing $40 of profit.
Yeah.
So it's just a trade-off. But nice thing is price is up today. And, it's always nice when it's like, oh, do I manage profit now, or do I want to hang out for the extra, $50 on this trade? So I'll let it marinate over the weekend. I don't think there's any reason for me to rush into this right now. I can come back and revisit this on Monday. So, all right. Look, how's are we doing and feeling? What are we doing? So what if it does not reach 684? Yep. So this is what I built out this morning. I showed, this is the trade that we took. Okay. So I don't know why the colors look all weird now, but this is still green. So the end of the day, this would be full profit. Okay. Like, this is where your profit trap is maximized. So this technically is all green in here. So that would be on the put side. This one is pinned at the 6. This is the 679 pin price. Okay. And then this one would be my 685. So I will give you the exact break even on the trade, right? And look, I think this is important stuff. When you're talking about trading options, you should know how to calculate your break evens. You should know exactly where price needs to be for you to make money. So on this trade right here, I'll use yellow. This was the 685 pin price right here. And this one's the 679 pin price. Okay. So the 685 iron fly, we went 3 wide on the wings. I know this is just silly jargon, but basically for $2.26 credit. Okay. That's what I pulled in. So that was my entry. And then that gives me a 74-cent max risk. Now my break-even price is I went 682.74 is going to be my break even, and 687.26 is going to be my break even. So if price is or greater or lower, okay, I have a profit trap. So this profit trap, if you're following my mouse here, the 685 profit trap, that profit trap is going to pay me at the end of the day if we're greater than 682.74 or we are less than 687.26. Now, it's not paying me the full profit trap. It is paying me in increments. So if it is here or here or here or here or here or here, these all pay. Does that make sense? So if it's greater than, I mean, here, I'll give you the exact number. Let's say that we're at 683 today. Okay. If we finish at 683, if we're at 683 near the end of the day, this trade would be I can maximize my profit. The 685 is a perfect trade. 685 is perfect, and that's for $2.26. Okay. So take 226 and now subtract $2 because 685 is perfect. 683 is still within the window, but it's not perfect. So I would make a net 26 cents on the day. So that's profit. But then the other trade that I would lose over here would be losing 60 cents. And so I could lose money and I'd lose, what is that? 34 cents. So I lose 34 cents today. I lose 30, 34, 35 bucks if we're at 683. If we're at 684, now I make $1.26. Okay. I make $1.26 and then I lose 60. So I make about $65 to $66 today. So that would be a good spot. Anything at 684 would be good. 685 would be awesome. 686 would be good. If price is going to fall today, well, be at 681, or I'm sorry, be at 680, be at 679, and be at 678. Because the break even on that trade, I'll just move this over here. Let's go the 679 iron fly, $3 wide wings, and I pulled in $2.40 credit. So that's a 60-cent max risk. So my break even will be 676.60 or greater for profit, or 681.40 or greater for profit. I'm sorry, less or less, lower. Does that make sense? So at the end of the day, my break even right there are these levels. It's got to be 676.60 or higher, 681.40 or lower. That's going to be my profit target, my profit trap. Okay. Over here, the break even is going to be 682.74 or greater, or 687.26 or lower. And so and again, today is a weird day because price is closed at 1 p.m. today. And we will see if price gives us anything. If it does, cool. If it doesn't, well, I do have some risk. And I was willing to accept that all day. It's not a lot of risk. I'd be down maximum about $1.30. It's okay. Am I happy with that? No, never. But it's certainly better than, jumping into something that I didn't want to get into this morning. But price right now is pretty calm. Let's see if we get any type of drift. Okay. GEX levels on SPX. Yeah, I've been watching it all morning. So SPY is right here. We have, we're hitting like this kind of call level. So either we stay kind of working our way up through these gamma levels this morning, or we come back and maybe find the gap here or the positive and negative gamma pivot around 679. So if we fall today, we're falling back to a spot that I've already got a profit trap on. Great. If we drift higher today, then I'm looking to see, does the market, hit the expected move with some type of drift into like the 684, 685, which are a decent, cluster of gamma levels to the upside. Okay. SPX. 68.40, 68.45. So, I mean, again, could it drift a little bit higher? Sure. 6840 to 6845. Sticky enough, if you're looking for some type of drift up and profit trap. But, it's more risk. I mean, if you're going for a a zero DTN SPX. Right now, that's way more expensive than what we did on the SPY. So I'm going to take my chances that, maybe SPX goes higher, drifts higher, gamma looks pretty good. SPY goes higher, gamma looks decent. I'll say decent because right now we're already hitting some of the bigger gamma levels. So 1706, 1809, 1775. It's like, I'm hoping that these all get hit today. If price just kind of melts up to them, that'd be great. But I guess we'll find out by, noon today, 12:30 today. Okay. Let's see here. I did get a daily profit Iron Condor 68.65 by 67.90, 10 wide for $1.30. Nice, Larry. What time did you get filled on that trade? I'm curious if prices kind of settled back in around just after 10 o'clock this morning. Which, if you think about it, that's pretty impressive. It's like electronic trading. We had a whole futures market outage, and within 30 minutes of us, from the comfort of our own home, sitting on a computer, it's like the world of trading is back to normal. That is kind of nice. Versus like, oh boy, we can't do anything now. So not bad. Anyway, good stuff. All right, Larry, I'll keep an eye on that one too. 68, 65, 67, 90. Good. All right. Well, for today, that's all I have for today. We'll see what happens on the SPY. Keep an eye on that. I'll post some messages. I put this out as a bonus trade this morning. Keep an eye on this today. I'll let you know if it closes out. What I will be doing is just monitoring my positions. So from here, take a look at my SPY. If I have the iron flies offering, this is my 85 one. So if price is drifting higher, then I'll keep an eye on the 685 one. If this is offering more profit, like net profit, then I will look to manage it. Okay. So the idea is if I can pull in, like I said, a net like 30, 40, $50 today and manage the trade during the day, great. If I want to hold it all the way near the close, then I'll get closer to those profit trap levels at, potentially $240 to $226. But one is going to likely be a loser. That's the reality. Is if price is going towards 685, then I'm obviously going to lose on this call fly or this put fly. I guess it's an iron fly, so not really a individual. There's calls and puts in this. But I take one of them as a winner, one of them as a loser. If I can net out profit, then I'm still happy. Okay. All right. Good stuff. Blake, any final thoughts? Any questions for today?
Oh, sometimes you just wonder what the heck the markets are doing. And I think you do a really good job of breaking them down, making them make sense.
Thanks, man. I think that's one of the beautiful things about options. It's like you should know before you execute a trade, like, what do I need to have happen?
Mm-hmm.
It's like, is there risk in this trade? Yeah. Is there reward in this trade? Yeah. Where does price have to go today? Hopefully up towards 685 or hopefully down towards 679. If I lose on both of them today, I'm throwing $130 at it. Do I have some money to play with? Sure. I'm up 20 grand on the day. So can I toss a couple $100 at it? Sure. I'll take my risk. So I feel like I'm playing with some house money today.
Yeah. That's exactly how today feels like. I mean, we got silver at all-time highs.
This is a really good sign, by the way.
90K. What do we got?
This is RSP. This is equal weighted S&P coming back up near all-time highs. This is a really encouraging sign. So, what this is telling me is that SPY, we're still within, a little bit of a little bit of these all-time highs. So we're about 1.1% away, but look at the RSP comeback. RSP is equal weighted. This thing has caught up in a bigger way. We're actually only 0.37% away from RSP making all-time highs. So this, to me, like that November 20th candle was the market's one-day opportunity. And I should say the market took that as a one-day opportunity to rotate, because what is coming back is not just a push in Mag 7. Let's take a look at market breadth to make sure I'm not just pulling this out of my butt. Here is market breadth. Yeah, big comeback in market breadth. Like, I'm telling you, traders, like, this is a really encouraging sign to kind of finish the year on a positive note. Obviously, there's some uncertainty ahead, but I think that we kind of squash the narrative of like AI bubble and economy's weak. I get it, man. There's still like the K-shaped economy. There's still the labor market concerns. I get that. But right now, as far as what the technicals are telling us, and fundamentally with this equal weight and market breadth, this is a really nice comeback. So I think this is an encouraging sign that what is happening is, there's some trimming going on in Mag 7. There's some trimming going on in heavy market cap weighted tech and equal weight. And maybe I'm not going to say the value play, because everyone that says value's going to outgrow, it's like, I don't believe that. I think the value has been underperforming for a reason. I've known some, long time value investors that have done nothing but underperform the market for a long time. So I think that throwing the word value versus growth, it's not the trade anymore. I think that you just have to respect that there's a phase for the market to give, equal weight of fighting chance, and that way it's not putting all the weight and clout on Mag 7. But there's sectors that pick up the slack. So let's see what else is going today before we pack it in. So today's performance, energy leading the way. Cool. Financials having a great comeback. JPM, what you want to see, all the stuff of concerns and AI bubble and recession. Like, look, if you have financials at all-time highs and you want to look at, to me, this is your poster child. If JP Morgan is making runs towards all-time highs, financials are pretty darn good. Okay. If Goldman Sachs is running towards all-time highs, like, we don't have liquidity concerns. If you look at HYG, we don't have liquidity concerns, right? Everyone's talking about what's the big black swan event? What's the next recession? Credit spreads are still tight, right? Things are liquid. There's going to be some bit of expansion from the Fed, probably in the next couple months. I did listen to a really, really great podcast this week. I was on the road on Monday, and it may not be the type of expansion and stimulus that we're accustomed to, like we saw during COVID or what we saw during the great financial crisis, but it's enough to continue to kind of feed what is happening in the fiscal dominant side. The government is spending money and will continue to spend money. We're going to continue to raise the debt ceiling. Is there going to be drama January 30th when we have the government shutdown stopgap ending? Maybe. But what are they going to do? Probably raise the debt ceiling, kick it down the road again, right? Because they can get something passed through the end of midterms or to the end of the year. It's going to be like an 11th hour deal. They'll pass it, they'll raise the debt ceiling, or they'll figure out some type of freaking bipartisan agreement, and they'll push it out through midterms. And then now it's just a power struggle. If it's the Democrats, Republicans, who wins the midterms? I don't know. But once the market gets over that hurdle January 30th, nobody cares until November. So having credit spreads tight, this is good. This is good liquidity. Having big investment banks at all-time highs, this is good. That's liquidity. They're talking about loosening restrictions and giving banks, the ability to lower their reserves and not have as much bond duration. That's great. So I just think there's ways that banks can be creative. I will say one thing that did have me a bit concerned. I kind of want to fact check this, but let me show you one. I thought this picture was kind of interesting. Let me see if it's in trending ideas. Oh yeah, this one here. This one I didn't love. And again, if you know who the Kobayashi letter, I don't know if you say it that way, Kobayashi, it is super doom and gloom all the time.
Yeah,
so
constantly.
I take it with a grain of salt. Like, it's always negative. I've rarely seen this like, oh, this is pretty optimistic from them. It's like, Michael Burry might as well write it. Anyway, but look, this is margin debt provided by broker dealers keep hitting all-time record highs. What I don't love is this is showing that traders are overly leveraged. And, leverage, as you hopefully know and suspect, it is a double-edged sword. Markets can go higher and leverage can work in your favor. And obviously markets can go lower and leverage will crush you. So I think also, I don't know if this is just like, is everyone just trading on margin, or are people trading leverage instruments? That I'm not sure. Right? Like, margin debt provided, it's like, if people are like margined out to their teeth in a broker account, that does concern me, because and again, it just means that there's a crowd of people that will be broken at some point if the market has a correction. At the same time, though, it's like, if you're leveraged up and you get paid, I would hope that this crowd is also managing profits and not being stupid. But again, I take it with a grain of salt, because this is a pretty much always a doom and gloom type subscription. So just I don't know. It's not free and clear. It's not risk free. Nothing is risk free. I will say that with absolute certainty. There's risk in these markets. We still have some interesting times ahead. Could we have some disruption in December? Yeah. Mutual funds typically do their distributions early early December, so we could have a weakness window, even though we still have buybacks now. And earnings season was, for the most part, pretty good consensus wise. Earnings expectations for Q1 are still pretty promising. I think that the stability we saw right after the November 20th candle is encouraging. I think looking at RSP today is encouraging. Market breadth is coming back in a pretty big way. Credit spreads look pretty tight. So far, so good. Now, what could derail this? I'll play devil's advocate. What could derail this? Terrible news in December could put a blemish on this rally, right? Non-farm payroll
Absolutely.
comes out whenever it's released. Something terrible happens. Maybe the Fed has a hawkish cut. That's another thing. That's a weird term, which is like they still cut December, but the whole time they cut, they still say how much they hate doing it. And the market takes that narrative and like it can be like a twisted, very noisy December 10th trading day. So stuff to watch for, right? Am I thinking that the market blows the top off? Not necessarily, but I think that the weirdest part about this market is I think that the risk is still to the upside. I really do. Okay. This just printed on Wednesday, and we're still sitting at this like very sticky bearish sentiment. University of Michigan sentiment at near record lows, bearish sentiment in the investor. What is this? Yeah, I mean, whatever it is. I thought there was an acronym for AAI, but I guess it's somewhere. Anyway, this is still very, very sticky bearish. Historical average is 31%. We are way above that. There's a lot in the neutral camp right now. We've trimmed the bull camp. And I think this is why the risk is still the upside. If this stays over 40% bearish, I think the market will just find a way to climb the wall of worry and piss off every bearish trader in the world until they throw in the towel. And then I'd be worried about a top after that. So it's always been a pretty reliable contrarian indicator. If people are overly bearish and think the recession is coming, it's funny how the market has done it this year, man. These last two big sell-off candles, October 10th, November 20th, we had those one-day sell-offs, and what happened? Instantly after those sell-off candles happened, put volume went through the roof. Everyone loaded up on puts, and what happened on the VIX? A complete reversal. This was this is right after the October 10th sell-off. Okay, so October 10th sell-off, you had this single day move, it drifted higher, the VIX peaked, and it crushed, and we hit all-time highs. What happened this last go around? This was a single day sell-off. We ran all the way up to 28 plus VIX. That was a one-day move. Right after that, reverted. So it's amazing how the market is being so much faster to almost deleverage itself and allow, I'd say probably smart money to de-risk and deleverage. It's crazy because what happens here is everyone panics and everyone buys puts thinking the VIX is going to go up, and it just reverts and we're back up towards all-time highs again with some reflexivity. So anyway, it's just a crazy dynamic market, man. Stuff is never a dull moment. I will say that. I've kind of warned about this pattern. Maybe we have a broadening pattern where we don't get too excited. Last year, November, December was a pretty sideways window. We could go sideways, which means no major damage is done. But as we come into Q1, it's like, do we have a correction before we have a rally? Do we have a melt up and blow off top? I don't know. If I knew it, that I'd be positioned for it. So got to wait and see. But the nice thing is we're not falling to lows. Thanksgiving felt a little bit better knowing that the market's not imploding on itself, and today's, kind of no different. So one last look at the SPY. We're at 682.45, looking a little bit better. Let's see if we can creep up here towards the 685 handle, which, by the way, my gamma is growing. Current net is 2020, so this has increased about 3,000 net. So let's see if this is climbing a little bit up for the day. It's already 11 a.m., and we're showing some profit here on the net. A little bit. Not much. It's not going to get exciting until the final. I can tell you this. It's going to be exciting around like 12 noon today, maybe 12:30. So if you want to see some updates in Telegram, I'll post it. I don't know if I'm going to go live today. We're tag teaming with kind of some childcare today, so I'm probably going to be doing a couple videos. I got some back tests to do for my income grid, but I'll be around. I'll still post at least a result for the day to see if I can close up some net profit. Any questions, Blake? I know I just ranted there for another few minutes, but anybody else? Any questions? We good?
They asked a couple. Someone want to know where Nvidia is going. I mean,
yeah, good
everybody
question.
buys Nvidia chips because they have to. Nvidia makes all the chips for AI, so they're pretty much cemented. Anybody that does anything AI, Google, OpenAI, Oracle, NBI, and name the company, they
It
all
all
buy
circles
Nvidia
back to
chips.
Nvidia right now. It
Yeah.
all circles back. Yeah. Here, look, here's the deal. Even though it's like, Nvidia this and everyone's making this big stink about Google, like, they launched Gemini 3 and it's pretty great and Google's up to all-time highs. Google, by the way, has outperformed. I think year to date Google's up like 65%, Nvidia's like in the 20s or 30s. I think I took, oops, let me get to
And Buffett just bought in
I
Google
know.
like
It
2 weeks
it might
ago.
not have been Buffett. It might have been, new chairperson Buffett, whoever that guy is,
Hmm.
right? But I mean, Berkshire always swings a pretty big bat in the stadium. So I mean, when they're,
Yeah, they do.
I just thought, man, at all time highs, and Berkshire Hathaway is buying it. But yeah, they're probably going to buy now, and if it pulls back, they'll buy more. They'll buy more. It's like I'm sure they're just looking at it like we're going to reestablish a stake in Google and then dollar cost average in. I'm guessing it's going to be something like that, or put in a stake, sell some puts, and just hang out.
That's
I think
right.
it gave Google like a little bit of endorsement, like, hey, if Berkshire Hathaway likes this, maybe there's more to run in this AI play. Here's what I thought was interesting. Gemini 3 released, and Google shot up. Look, I don't think that any of this is like Google is better, Nvidia is better. I think at the end of the day, they all need each other to do well. I think Google needs Nvidia to do well, and I think Nvidia needs Google to do well. I think Nvidia and all of them need like Oracle's debt to be well managed and not freaking running out of money. They all need like CoreWeave or Open AI. It's like all the web of AI stuff that's like they all have to like survive it together. And we're talking like some of the biggest companies in the world. These are the hyperscalers that are in this little web of who's buying what from who and how it's getting sold in the markets and whatever. It's it's an interesting game. But I think at the end of the day, like, are they going to have like one dominates all, or is it in order for the AI narrative to stay positive and optimistic? I think they all have to do well. So I don't love tons of tech exposure just because I think it's the most vulnerable to like the biggest pullback. Tech has been leading us through everything for the last decade plus. Mag 7, I mean, Mag 7, everything ETF, Mag 7 exposure. A rotation out of that would be, somewhat similar to what we had in February of this year, February, March this year, that initial pullback before Liberation Day stuff, that was all Mag 7 rotation. So here we are again, like Mag 7 price to earnings is still like 33, 34 times earnings. It's pretty expensive versus the broader market at like 22. So anyway, it's like I still think they all need to win together in order for this narrative to stay really, really optimistic. So Nvidia, Google, it's like, is one better than the other? All I did, and I did this in Project Options Edge, I did puts all the way down here to like 155. And I'm like, you know what? Buffett wants to buy shares of Google right now. I will just take a ratio spread and generate, $160 to $320 of profit. And I'm willing to own some shares way down here. And maybe I never get assigned, but at least it's a safe income trade. I can make a couple $1,000. If I did Nvidia, I have a ratio spread on Nvidia all the way down here to $100.
Yeah.
Am I gonna get assigned at $100? Probably not. But if we drop, let's say this forms some type of topping pattern. We had this huge rip from here. Let's say this forms a topping pattern and it pulls back down. Who would look at this from a technical standpoint and say that's a pretty good spot to buy? Probably most people,
I
right? If
would.
you got one of the strongest companies in the world, you got a $4.3 trillion company that just had a correction and it pulls back to resistance, it becomes future support. Would that not be a good spot to be participating for another long? Probably. And on paper, like Nvidia's earnings and expectations, and I know it's a law of large numbers, but they keep hitting it out of the ballpark, man. They're beating earnings every single quarter by staggering numbers. And I mean, they have like an 80+% moat in this like AI race. Everyone is using Nvidia. They have like insatiable demand. So I understand there's competition out there, but they just have such a head start against everyone else that I still think it's just an important company to stay a part of. But I'm going to use it as income. Your high flying days of Nvidia, like maybe they're still ahead, but I would say, considering this thing has had tens of thousands of percent gains in 20 years, it's like I'd say it's a good run. Now
It's a
use it
real
as, it's
good
like
run.
when you're the number one stock in the world, it's probably not going to trade like the meme stock everyone wants it to be like Nvidia's going to $1,000. It's like, how hard it is to be a $4.3 trillion company and quintuple in the next year or two.
It's crazy.
It'd be very difficult. It'd be very difficult. Is it possible? Sure. But it's also possible for it to flinch and have a 20 to 30% correction, which will absolutely drag the market with it. So if NVIDIA, same thing I said about US versus the world, if NVIDIA catches a cold, the market's going to catch the flu for at least a second. It's just that big. It's that big. It's that concentrated. So, I mean, everyone should see, you want to see NVIDIA do well. You want to see Google do, you want to see your Max 7 do well because they are super large and they have the money, they have the cash to keep this build out alive. Everyone's arguing right now that we wouldn't have, any GDP growth if it wasn't for Mag 7. We wouldn't have any construction and infrastructure build out right now if it wasn't for AI data centers. And if that's true, then yeah, residential construction, commercial construction, real estate. I mean, everyone's talking about how unaffordable things are, but yet we have a story, we have a narrative that is keeping this market optimistic. And as long as the market can stay optimistic, we know that the highs keep getting higher, the melt up continues, and the flows continue. But if all of a sudden that breaks and it makes the market flinch, and all of a sudden we start ignoring or discrediting Mag 7 or discrediting AI because it's a bubble, it will come back hard. And I mean, I don't know. I just don't know if people are like, do you want a bearish market? Like, how many of you want a bearish market? I mean, if you're going to invest for the next 20 years, it's like, sure, give me a bearish market so I buy things on sale. But Blake, if we have another 2000 correction and it takes 13 years to get technology back into all-time highs, does anybody want that?
Nope.
No, nobody wants that. Everyone
consolidate now.
Yeah, I mean, so again, sure, like this would be fine. Consolidating here within maybe I'll even give the market 5 or 10%. Give the market some time to consolidate, okay? And let's figure out if we can truly keep this party going. Fiscal policy, monetary policy, the under the hood economy, maybe the K-shaped recovery gets a little bit better, right? If you're being encouraged, like the big beautiful bill stuff, liquidity going back in the system, if all of a sudden they are giving kids a starter account for $1,000 and it's helping families at least get something in the markets for their children at birth, it's like this is all going back in the markets. I would hope, even when, and I don't want this though. I don't want $2,000 freaking tariff dividends. I don't want that shit to hit the market. Like nobody should get those checks. I'm sorry. It's like, if you think that 2022 felt good, or 2020 to 2022 felt good to get like a one-time check or two payments of, a couple $1,000s, did that change your life when all of a sudden everything is 25, 30, 50% more expensive? Like that trade-off is not worth it. I would rather say,
you think they're really going to do that?
I mean, I freaking hope not, dude. It's like, why would that even be a plan? Unless you're like, we can do this, but there's no inflation that's going to happen. That's impossible to know. No, and honestly, I feel like we just effing did that in 2020. Why the hell would that be a good plan? The 50-year mortgage, the $2,000 tariff dividends, like they sound stupid to me. And I do not want to see, like, if you want to break this story, like then let's hit, 6, 7, 8% inflation again on CPI. Then and we'll go into a nasty recession. Like 2020, we bought our way out of it. I don't think we can do the same thing without throwing 5 or 10 times the money at it. I think that's the scary part.
That's the scary part.
Yeah. If we had COVID again, it would take $10 to $20 trillion to get out of it.
It's almost like the next step is just universal basic income for everyone. It's crazy. I was floating the idea around, and I'm like, that just does not sound good. But this seems to be where shit's heading.
Yeah. Well, I mean, Elon Musk has even mentioned that if we have all the tech in the world, we have all these robots and everybody's on autopilot because things, AI / robot / whatever's, everything's automated, everything's doing things for you. It's like, that's a great and interesting world to be in, as long as there is some type of standard of living for people to maintain. At the same time, you mentioned universal basic income. Michael Green is a guy that I follow. I think I don't know if I mentioned this to you in our Slack at all, Blake. Like Mike Green, he just wrote something on his Substack. He's a super depressing sounding podcast guy. He's a fund manager. His fund's like $12 billion in assets, but he's all about the mindless robot of inflows and forced buying in the markets that keep the wheels greased. And anyway, he wrote a paper on like basically the poverty line is like $140,000 based on when it was first established back in like the 1920s, adjusted for inflation. He's like the poverty line should be closer to like $130,000 a year based on like food costs. And I don't think he's necessarily wrong, because I feel like most people that are, if the median household income is like 75K, you're probably struggling. You're probably living paycheck to paycheck. I don't know how life has gotten any cheaper for anybody.
It hasn't. It's gotten more expensive.
Yeah. So if things have if car prices have doubled, if home prices have doubled, how are we not having wages to double to like keep pace with it? So
right.
I don't think he's wrong. And I mean, I haven't personally like read the Substack, but I know he was touting on a couple podcasts I've listened to in the last couple of weeks. But it does make a lot of sense where it's like, yeah, if you adjust this stuff for inflation, I mean, our poverty line is probably way like we're saying, I don't even know if it's still like 27K, but that was always the poverty line is like 27K.
Yeah.
It's like
when I was a kid, that was it, 27, 30K. And then it turned to 40K. And then it was like 60K. And now it's all the way up to 70, 80K. It's like now you're living paycheck to paycheck.
Yep.
What is happening?
No, it's so again, like the whole idea of like universal basic income, it's like if we think that we're going to have this world of abundance, we could have the greatest companies in the world make 99% profit margins and it's super efficient, it's the greatest thing ever. I still think their greed is going to hurt everybody in the long run. At some point, it's like if we don't have the means to, consume things, which is 70% of our GDP, and we need to like, tax the living crap out of every Fortune 500 company that is crushing it with earnings and margins. I don't know how well that conversation goes.
Yeah,
if the government's like, hey, if you want to do it's like if you want to do business here, this is what we need, and they're like, okay, do we just leave the U.S. then? Like, I don't know how greedy like that situation gets. So the whole conversation of universal basic income, it feels very dystopian to me, and I hope that's not what it. I hope it's not what it becomes.
I hope really not either. I just say it because like I was thinking about it. I'm like, Andrew Yang was just probably 30 years early.
Yeah, very true.
That guy was very probably just about 30 years too early.
Yep. So. I saw, Don says the GDP. Yeah, I know, but also Japan is like 220% debt to GDP, and they're still fine. So I don't know. I that's the Ray Dalio changing world order. The 100% GDP debt to GDP is always like the falling empire. It's just, look, man, we are all in the same boat, and this is like a debt. This is a global debt problem. Everyone has the same punch bowl, and I don't think that you can just fix U.S. debt. And the U.S. is heading for a disaster. It's like the whole world is like a ticking time bomb when it comes to debt. If it's going to get, if it has to be repaid, it's a ticking time bomb that'll explode and end very poorly. But the whole world is also in the same boat, where I think that there's going to be some very creative accounting that happens in order to prevent some type of, implosion, calamity. I mean, look at the tools and the resources and the levers and the programs and the political. It's like you can have a political and central bank like working in tandem to basically prevent recessions. I mean, technically our last recession was 2008, 2009, because after that it was like 2020 was a blip on the radar, and it was, not a recession. 60 days later, we're back to all-time highs and the world reopened in 30 to 45 days. So that was our last recession. 2022 was a bit of a rolling recession based on sectors and individual pockets of the economy, but not the full economy. So I just think that we have ways to like prevent it. And it's kind of scary. It's like, it's scary that we can just keep going with like no recession, but it keeps going back to what I said. We're climbing the wall of worry.
That's right. Every
climbing the wall of worry.
Day.
And it can keep doing that until it is, as they say, like the markets can remain irrational longer than traders can remain solvent. So for the perma bears out there that are just like, this is all going to end, and this is all going to end poorly, maybe you're right, but maybe it's in 5 years. Maybe it's in 10 years. Maybe it's in 15, 20 years. And the amount of money that you will miss out on by just going to cash and being fearful. It's like, I don't know. I'd rather just, there's an outlier right and there's an outlier left, and there's probably the reality is somewhere in the middle. I'm going to live in the present moment and stay in the markets and, manage my risk, because that way, whether the market does this abundant upside or it crashes and all of a sudden things are broke forever, there's probably a middle ground that we have to actually trade and navigate. And so I can
Absolutely.
make a lot of money in that versus, I'm all out, I'm all in. I don't think anybody won. I don't think that's smart for either party to like have just one side of this is like it's all bullish, it's all bearish. There's so much more of a gray area of the unknown, the uncertainty that you just have to manage risk.
That's
Manage
right.
risk and make good decisions.
That's right.
So
It's all gray.
cool. All right, Blake, good stuff today, man. That was fun just to get back on
Yeah.
here and chat for a couple hours. I will post some updates here in the next little bit. I mean, the market's only open another 45 hour 45. So by 2
Yep.
p.m., I'll make a decision. The nice part is right now, I don't think option strat is accounting for the close today at 1 p.m. So this is what it's technically going to look like at 1 p.m. Right now we're trading at 682.86. So I'll do the math here. 685 is worth $2.26. So if it closes right at 683, I take off $2. Oops. I'll make 26 bucks on that. So I need price to give me a little bit more of this profit trap. I'd love to see price up here towards 683 and change. I'm hoping that this is not the gamma at 6.2. So we're right at 683-ish now. I'd love to see it kind of melt up through the 684 and 5 handle because that way I can pull like $100 or more, and then I can only lose the 60 on the other side. So I can grab something net on the day, which I'd be happy with. If we somehow get to 84, 85, sweet, that'd be worth 100 to 200 plus dollars, and that makes it a really tiny loss. So we'll keep an eye on it for the day. I will watch this as the morning goes. I'm going to start doing some back testing on my income grid right now. So 25 bucks, 26 bucks. I'm basically flat on the day. I will keep an eye on this to see if this 685 iron fly is going to start offering more profit. And if I can squeeze like 30 to 50 bucks net profit out of this, I will try. And that'll be probably the way I manage it through the day. If it's getting closer to like 84, 85 as we're pushing into the final hour or so, then maybe I'll try to ride this out for a decent win on the day. But I'll post this all on Telegram, whatever happens.
Sounds good, man.
Cool. All right. Thanks, Blake.
Yeah.
See you, everybody.
Thank you, Chris.
Have a great weekend.
See you guys back on Monday.
Yep. Bye.
Later. All right. Folks, have a good weekend. Hope you had a good Thanksgiving. Hope you have a good Black Friday. And I'm gonna close it up. Nothing really for me. No presentation. So we'll see you guys Monday. We'll see you tonight on the Evening Edge. I'll be hosting that at 7. Graham and Nate are live right now on the opening playbook, so you should go check that out if you're not doing anything. Chris, can you nudge support? What's up? Here, well, he's gonna update you in Telegram. So oh, you need to renew DPP. They're probably not working today, but you can email support at the trading pub. You can also just send me like your email. Yeah, but I would email support or all right. You want to renew daily profit plan? Is that what I'm hearing? William? All right. All right. Boom. I just sent that over to the team. All right, guys. Have a good one.